Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, an indecisive spinning top yesterday that could also be seen as a bearish harami, if only just. The market utilised, more or less, the long moving average currently at 108.35 for a strike higher that was not sustained in the end. Prices punched up through the short medium moving average currently at 108.43, but was stopped dead by the 50% Fibonacci line for 2023 at 108.64. The market finished up closing just below the long moving average instead of right on the moving average as I did in the previous session. The long and short medium moving averages as well as the 50% Fibonacci line are all in a wide band of overhead congestion between 108.35 to 108.83. Further up we have the important 50% Fibonacci line for January 2021 to September 2022 move at 109.44. Now this had been a good capping resistance in recent weeks, and even further up we have the broken green highlighted lower bull channel line currently at 110.32 of the October 2023 to late January 2024 bull channel. This lower bull channel line also acted in the past as an overhead capping action, and even now I'm still wondering if the market will continue trawling along the underside of this lower bull channel line, though to be honest, any hopes of this are fading fast. Meanwhile below, well, we have congestion below, but nothing to write home about until the May 2020 low at 107.66, and the more important April 2020 low at 107.25. So far today, well, price is capped by the long moving average, but not really keen to try lower either just yet. Cable, aka sterling against the US dollar. An immediate countering bearish dark cloud cover pattern yesterday, but it could also be seen as a possible indecisive spinning top. This coming after the previous session's reactionary bullish piercing line pattern. There's also a third consecutive close below the slowly rising medium moving average, currently at 126.51, despite penetrating it, and a fourth consecutive close below the lower time, currently at 127.13, highlighted in dark blue on my daily chart, and that's of the broken November-December 2023 shallowly bullish shift pitchfork, and its recent reinforcement, the short medium moving average, currently at 126.79. The cap on the action was the September 2020 low at 126.72. Now looking below, we have the interesting combination of the flatlining long moving average, currently 125.87, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Finally, the market is still within the previously mentioned general congestion zone, formed between December 2023 to January 2024, between 126 even area up to the 127.75 area. Further down, we have the lows of February at 125.32 and 125.15, the latter apparently being the more significant. And so far today, well, an initial dip down towards the 50% Fibonacci line and the long moving average support, but a quick pullback up as well, away from really testing it, though not that far. Euro sterling. Yet another indecisive pattern yesterday, this time a second consecutive indecisive spinning top, to match the previous session's one and earlier indecisive doji cross. This still testifies of the capping power overhead of the previously highlighted heavy-duty congestion formed from the crossover of the upper trend line, currently at 86.19, of the purple highlighted late January breached but not broken expanding wedge pattern, and the dark blue upper time, currently 85.94, of the November to December 2023 bearish shift pitchfork, plus the recent dead cross of the medium moving average, currently at 85.95, down through the long moving average, currently 86.07. However, that congestion reached its peak 2 weeks ago, and is now dissipating. Looking below, we have the combined December 2022 and 2023 lows, December 2023 lows as well, at 85.45 and 85.47 respectively, as well as the flatlining short-medium moving average, currently at 85.50. Overall, the market still remains within the breach but not broken, purple highlighted, late January small expanding wedge pattern, currently 85.29 to 86.19. In the recent process of moving higher, the market left behind a similar pipe bottom in early March to the one seen in mid-February, leading to speculation that we might have a larger double bottom pattern formed from these pipe bottoms. More on this should it develop. So far today, well, not much. Looking like yet another indecisive pattern right now. US dollar against the Japanese yen. A bullish engulfing pattern yesterday, though it could also be seen as yet another indecisive pattern. A possible descending spinning top. Indecisive spinning top? Yeah, indecisive spinning top. To be honest, the bullish engulfing pattern wasn't that hard to create given the previous session's indecisive spinning top as well. The base of the action was once again on the congestion from late February between approximately 150 even to 150 and 3/4. Topside. Now, topside, well, we still have the capping peak formed by the high back in November last year at 151.92. Beyond November last year's highs, we have the middle time currently at 153.04 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. We're also, overall, still within the large purple highlighted February 2022 to January 2023 bullish shift pitchfork. In between the middle time overhead, currently at 158.63, and the lower time below, currently 144.55. Now, so far today, we've had a strong attempt higher, making a new high not seen since 1990, but also a strong reactionary move back down, such that we may have a daily key reversal today. Now, to have this, if we either close above 151.55 or under 151.41 would be on. Anything in between and would have a lesser outside day. And right now we are barely looking at a daily key reversal down. US dollar against the CNH, the offshore Chinese yuan. A possible hammer pattern yesterday after the previous session's reactionary bearish dark cloud cover pattern. Yes, I know it is high up to be a hammer pattern and should be looked at as a possible hanging man pattern, but it does fulfill the criteria from the previous session to be a hammer pattern. The back of the action was unsurprisingly on the dark blue highlighted upper trend line, currently at 723.65. The base being built there. And that's of the mid-January to date ascending triangle pattern. That's currently 722.74 to 723.65. Overall, we still have the conditions set up for March to be a possible monthly key reversal. Thus, if we close on the 29th of March, so please be aware Good Friday is not a holiday in China and the US does not celebrate religious holidays. So if we close on Friday the 29th of March, either over 720.65 or under 718.49, then we'd be on. Anything in between will be a lesser outside month. Right now we are looking at a possible monthly key reversal up. Overhead we have the capping action of the neckline currently at 729.08 of the bright red June to July 2023 head and shoulders continuation pattern. Looking below, we have the very slowly rising long moving average below, currently at 722.97. That is about midway between the two trend lines of the ascending triangle pattern. Okay, so 2 weeks ago I laid out some ideas for potentials below, for the then break lower from an ascending triangle pattern. Thus primary target X is down in the 716.05 zone, with secondary hard to reach target X1 down in the 710.70 zone. The opportunities below are still severely curtailed right now, but for the moment I will keep those targets on my daily chart, as we've already had a possible false break lower, and now a sometimes seeming false break higher as well. So, as I say, I'll keep them on for now, but I'm happy to retire them in a heartbeat. But, and it is a big but, I am mindful of the potentials now topside. So for good order's sake, I have marked, for the moment, a primary target X2 topside for a continuing move higher at 730.05 and a secondary, much harder to reach target X3 up at 732.80. So far today, a fresh move higher, already looking like a possible bullish engulfing pattern, if only just. US dollar against the Mexican peso. A second bearish black crow yesterday and a follow-on to the previous session's bearish engulfing pattern. It was the lowest low and low close since July last year and is testing the 2023 low at 1662.11. The top side is capped and highlighted in bright red by the neckline, currently at 1676.12 of the February to April 2021 head and shoulders top. But overall, looking below, we still have support from the 2023 low at 1662.11. Now, overall, we are also still in between the dark blue highlighted tines of the December 2023 to January 2024 mildly bearish shift pitchfork. We have the middle tine overhead, currently at 1685.84, and the lower tine below, currently at 1652.53. Now, below the lower tine, we have the December 2015 low. Sorry about that. We have the December 2015 low at 1646.25. and further congestion at 1643.33. Overhead, there's also some congestion just above where we are now, between 1670 even and 1680 even, dating from August last year. So far today, not really an attempt lower, but a reaction higher instead, though this has been limited, and we've now moved back to where we roughly were when we started, right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.